What if I told you that the biggest economic story of 2025 isn't what you think it is? While everyone's celebrating record stock prices and talking about Trump's economic wins, there's a financial time bomb ticking away in the background that could reshape America's economic future forever. Today we're diving deep into Trump's so-called Big Beautiful Bill and why it might be the most dangerous piece of legislation you've never heard of. The markets are partying like it's 1999. The S&P 500 just hit another record high. Business confidence is climbing. Even the tariff fears that had everyone panicking back in April seem to have blown over. CEOs are whispering in boardrooms that maybe, just maybe, Trump's trade wars are actually elaborate negotiation tactics designed to get better deals, not start economic Armageddon. The mood has shifted so dramatically that Wall Street is once again treating Trump like the dealmaker from his first term, someone to be taken seriously but not literally. But here's where things get interesting, and frankly, terrifying. While everyone's focused on the stock market fireworks, Congress just passed something called the One Big Beautiful Bill, or BBB for short. It sailed through the Senate on July 1st, cleared the House on July 3rd, and Trump is planning to sign it into law on July 4th. How's that for timing? Independence Day for what might be America's independence from fiscal sanity. On the surface, this bill looks like standard Republican fare. Tax cuts, spending reductions, the kind of stuff Paul Ryan used to dream about. But dig deeper, and you'll find something far more sinister lurking beneath the surface. This isn't just another tax bill, it's a masterclass in how to destroy an economy in slow motion while making it look like you're saving it. Let's start with the headline grabber. The BBB extends Trump's first-term tax cuts that were set to expire. Republicans are calling this maintaining the status quo, but here's the problem: the status quo is already unsustainable. Over the past year, America's budget deficit has been a jaw-dropping 6.7% of GDP. That's not a typo. Nearly 7 cents of every dollar the government spends is borrowed money. If this bill passes, and it's almost certainly going to, that deficit stays right around that catastrophic level. But it gets worse. Within about 2 years, America's debt-to-GDP ratio will surpass 106%. That's higher than what we hit after World War II, when we were literally rebuilding the world and defeating fascism. What's our excuse now? Tax cuts and political theater? The tariff revenue Trump loves to brag about will help, but it's like trying to fill a swimming pool with a garden hose while someone's drilling holes in the bottom. Now, you might think that if they're worried about debt, they'd at least cut spending intelligently. Wrong. The BBB is a masterpiece of backwards priorities. Think about it. America's population is aging, life expectancies are rising, and our biggest expenses are programs for seniors. The logical move would be to gradually raise the retirement age or trim some benefits for the wealthy elderly. Instead, this bill gives pensioners a tax break while slashing Medicaid, which provides health care for the poorest Americans. The human cost here is staggering. According to official projections, this bill will add nearly 12 million Americans to the ranks of the uninsured. 12 million. In the world's richest country. Many of these people will lose coverage because of new work requirements that sound tough on paper but in practice create a bureaucratic nightmare that helps no one while hurting millions. But wait, there's more. Remember all those clean energy tax credits that Biden passed? The ones that were supposed to help America lead the global transition to renewable energy? Gone. Completely repealed. Now, I'm not here to argue about climate change politics, but think about this economically. We're in the middle of an AI revolution that's going to require massive amounts of electricity. Countries that can generate cheap, abundant energy are going to dominate the artificial intelligence race. By killing incentives for renewable energy, America is essentially handicapping itself in what might be the most important economic competition of our lifetimes. Even the way this bill passed reveals something deeply broken about American governance. The BBB is massive because Congress has basically engineered a system where governing parties get maybe one shot per year to pass major legislation with just 51 Senate votes instead of the usual 60. So everything gets crammed into these giant omnibus bills where proper scrutiny is impossible and lawmakers can hide all sorts of pet projects and favors for special interests. Now, the Trump administration and their supporters have a response to all this criticism. They're betting on growth. Their projections show nearly 5% more economic output over the next 4 years. The argument is simple: if the economy grows fast enough, it'll solve all these debt problems automatically. More growth means more tax revenue, which means deficits shrink even without painful cuts. It's a compelling story, but here's why it's almost certainly wrong. First, most of the tax cuts in this bill are already in effect, so there's no fresh stimulus boost coming. Second, those tariffs Trump loves, they're actually a drag on growth, not a boost. Third, and this is crucial, interest rates are 3 times higher than they were when Trump last cut taxes. The Federal Reserve isn't going to just sit back and let fiscal policy run wild. They'll likely tighten monetary policy to offset any inflationary pressure. The supply-side tax cuts that might actually boost investment and productivity? They're only 8% of the total bill by cost. The rest is mostly gimmicks like exempting tips and overtime from taxes. These might sound good in campaign ads, but they're not going to transform the economy. Here's where things get really scary. All this debt isn't just some abstract number on a government spreadsheet. It has real economic consequences. In normal times, government borrowing crowds out private investment. When the government is sucking up all the available capital, it becomes more expensive for businesses to build new factories, data centers, or research facilities. That means less innovation, fewer jobs, and slower growth. But the real nightmare scenario is what happens if bond markets lose confidence in America's ability to pay its debts. Goldman Sachs ran the numbers, and they're terrifying. If Congress keeps postponing fiscal responsibility for another decade, they might eventually need to cut spending or raise taxes by 5.5% of GDP annually just to stabilize the debt. That's more severe than the austerity that nearly destroyed the Eurozone after the debt crisis in the 2010s. And if that proves too politically difficult? Well, history shows us what happens next. After World War II, America dealt with its debt through inflation and financial repression, basically forcing savers to accept below-market returns while the government inflated away its obligations. It's a hidden tax that devastates the middle class while protecting the wealthy who can hedge against inflation. The really tragic part is that this isn't happening in isolation. Trump's renewed attacks on Federal Reserve independence are adding another layer of uncertainty to an already fragile situation. His cuts to scientific research funding are undermining the innovation that makes American businesses competitive. His casual disregard for legal norms is making America a riskier place to invest. Even as American stock markets soar in dollar terms, they're actually falling behind when measured in foreign currencies. The dollar has dropped 11% this year, and that's not just some technical market movement. It reflects growing international skepticism about America's long-term economic prospects. Look, I'm not here to be a doom and gloom prophet. America has enormous advantages: the world's most dynamic economy, the strongest military, the most innovative companies, and the global reserve currency. But advantages can be squandered, and that's exactly what's happening with policies like the Big Beautiful Bill. The optimists will tell you that markets are efficient, and if there were real problems, investors would be fleeing American assets. But markets can stay irrational longer than countries can stay solvent. The fact that stocks are hitting record highs doesn't mean the underlying fundamentals are sound. It might just mean that investors are betting on America's ability to export its problems to the rest of the world through dollar dominance. The question isn't whether America will face a fiscal reckoning, it's when and how severe it will be. Every year that passes without serious fiscal reform makes the eventual adjustment more painful. The Big Beautiful Bill isn't just kicking the can down the road, it's loading the can with dynamite. So what does this mean for you? If you're an investor, diversification across currencies and asset classes becomes even more important. If you're a business owner, understanding the long-term implications of fiscal instability should factor into your strategic planning. If you're just someone trying to build wealth and protect your family's future, you need to understand that the economic playbook that worked for previous generations might not work going forward. The tragedy is that none of this is inevitable. America has the resources and capabilities to address these challenges, but it requires political leadership willing to make hard choices and level with the American people about the trade-offs involved. Instead, we're getting beautiful bills with ugly consequences. This is the reality behind the market euphoria and the political theater. While everyone's debating tariffs and trade wars, the real threat to American prosperity is being written into law with fireworks and fanfare. The Big Beautiful Bill might be the most expensive Independence Day gift in American history, and future generations will be paying for it long after the celebrations end. What do you think? Are we being too alarmist about America's fiscal future, or is this the wake-up call that nobody wants to hear? Let us know in the comments below, and don't forget to subscribe for more deep dives into the economic stories that really matter. Until next time, keep your eyes on the real numbers, not just the headlines.